Good morning, everybody. We have a mostly higher trade in the grain markets here early on Wednesday morning. It is 6:30 a.m. Central Time. July corn futures unchanged at 688 and three quarters. December corn up 1 and three quarters at 578 and three quarters. July soybeans up 8 and three quarters at 1557 and a quarter. November soybeans up 12 and three quarters at 1409 and three quarters. July Chicago wheat up 5 cents at 698 and a half. July Kansas City wheat up 6 and a quarter at 643 and three quarters. July spring wheat up 18 and a half cents at 790. If you guys are listening on the podcast, as always, appreciate it. Leave me a review or a rating if you have not already. Any kind of comments, good, bad, ugly, I'd love to hear about them. If you're watching on YouTube, make sure you hit the like button. Make sure you subscribe to the channel. We hit that goal of 2,000 subscribers. We're going to shoot for a whole lot more now. So thank you again for tuning in. If you need some additional assistance from me, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan here in the upper right hand corner. For $49 a month, I offer a subscription service, which includes my morning email that goes out every business day at 6:30 a.m. Central Time. It includes every overnight headline that you need to be aware of, all sorts of interesting charts, graphics, weather maps, all my grain marketing recommendations, whether it be cash or capture and carry options, all that sort of stuff. There's a text message service that goes along with this. I'm also doing subscriber only videos and content, which are also included. I did one yesterday regarding the 2022 marketing situation when it comes to corn, soybeans, and wheat. What should we be looking for? What are some of the unknowns when it comes to next year, in particular regarding inputs, rents, that sort of thing. So I had a conversation on that. So if you're looking for some more in-depth stuff regarding marketing, certainly check out that subscription service. Let's get into some of the headlines here this morning. U.S. corn shipments, very strong again last week, over 2 million metric tons, about 81 million bushels of corn shipped last week. This is above the pace needed to hit USDA's export target for the marketing year, which ends on August 31st. So corn shipments, very good. China is taking the majority, it looks like, of what they've purchased. So, back, and I've talked about this before, back 2, 3, 4 months ago, a lot of people thought that we'd see cancellations of Chinese corn purchases, that sort of thing, and we really have not seen any of that. It looks like China's going to take just about everything that they've purchased. Soybean shipments were soft, only about 7.5 million bushels. Bean shipments have slowed, of course, amid a monster crop in Brazil. In the U.S. here, you've got a big inversion in the market and some very high old crop prices. So that market attempting to ration some supplies here. Brazilian corn production estimates continue to fall. StoneX, or FC Stone, was out with the lowest estimate I've seen so far yesterday, 89.7 million metric tons. USDA is at 102, CONAB is at 106.4. So that is the lowest estimate that we've seen in regard to the Brazilian corn crop from any well-followed group. This light crop in Brazil has been a contributing factor for a long time now to the rally in the corn market. The weather issues, there's no rain in sight right now, and it looks like the damage is done, and any rain from here on out would probably be too little too late anyways. So that's an additional supporting factor. USDA had its weekly crop progress report out yesterday. The initial corn rating, 76% good to excellent compared to 74 last year, 74 on average. You've got some good stuff and some bad stuff here. States with ratings 80% good to excellent or better include Iowa, Illinois, Nebraska, Wisconsin, Kentucky, and Pennsylvania. And then you've got some problem areas. States below 70% good to excellent include North Dakota, South Dakota, Missouri, Michigan, and North Carolina. The crop is now 95% planted in U.S. corn versus 90% last week, ahead of the 87% average. Crop is 81% emerged nationally versus 64 last week and 70 on average. That's a strong initial crop rating nationally. That's 76% good to excellent. I think the trade was looking for 70 or 71. So despite that we were above trade expectations, the corn market was able to trade higher for a good chunk of the overnight session. Soybean crop is 84% planted versus 75 last week, 76 on average. USDA did not put out a national soybean rating this week. I believe that will be out next week. States that are less than 70% complete in regard to soybean planting, so the slower states, include Kansas, Missouri, Kentucky, Tennessee, and North Carolina. Bean crop is 62% emerged versus 41 last week, 42 on average. Again, no national crop rating. U.S. spring wheat, 43% good to excellent, down from 45 last week, way below the 73% average. Conditions in North Dakota were flat on the week, 31% good to excellent. South Dakota fell to 45% good to excellent from 47. Minnesota fell to 80% from 84 last week. So spring wheat has some major issues here. The forecast looks dry and warm, providing little relief to drought-stricken crops. Now, some people might argue that the heat could actually be a good thing for the crop, but it's this is a big problem. I have a spring wheat chart I'd like to show you here. The market, spring wheat futures traded their highest level since July of 2017 overnight. We got up to 790 and change in the spot month contract. But when you look at the monthly chart going back to 2008, when the delivery contract spiked up to $23 or whatever it was. I mean, spring wheat in the 790s or even $8 still looks kind of cheap in the grand scheme of things. We had that whole period of time in, late, it was 2011, 2012, where we were well above $10 into the 11s. So, despite all these crop problems, I'd probably make the argument that we're right now at the upper end of what's been the range here over the last, 5 years. And we could very easily exceed that the upper end of that range if these sort of crop problems continue. So just to kind of put that in perspective here today. JBS says that it will have the vast majority of its plants operational today. This was a big story over the weekend and yesterday. So yesterday, JBS said that it basically shut down all of its U.S. operations, and now they're saying that they've made significant progress to resolve this cyber attack. JBS told the U.S. government that the attack likely originated from a Russian-based criminal organization. JBS, again, they halted their U.S. operations yesterday. The cattle market was sharply lower early yesterday. It rebounded, recovered a little bit. JBS controls 20% of the U.S. Cattle and hog slaughter, so that's a big deal. U.S. weather forecasts remain mostly dry for some western and northern areas. Most notably, the Dakotas will see only minimal rainfall through at least the second full week of June. Rainfall will be limited also in Iowa, southern Minnesota, far northern Illinois, some other pockets. You've got these above normal temperatures rolling in to the Corn Belt today or tomorrow. They should last through at least the 10th or 11th in most areas. Cattle market, again, did finish lower yesterday, but it was a lot worse earlier in the day. We'll see how the market handles this news that JBS is going to start reopening here today. In the outside markets, the S&P is up 2 points. The Dow Jones is up 40. Gold's down a little bit. Silver down a little bit. U.S. dollar is up. Crude oil up 64 cents at 68.36. And the July WTI, strong trade there. Bonds up just a little bit. Everybody have a wonderful day today. I will talk to you same time tomorrow morning.